Well, g'day there everybody. Thanks a lot for joining me on this Wednesday afternoon market recap. I hope you are doing well no matter where you are located around the world. A very significant session of trade has just taken place, although we didn't see it really significant in that of the market retracement, the pointage drop. What is significant, however, is that largely we have now just closed that of the open window, taking us all the way back to the 30th of October, 2018. What do I mean, sort of? Well, the S&P 500, it definitively closed its window. If you pay attention to the H number on my screen just here, you can see that the highest price on the 30th of October was 2,685. If you now pay attention to the L of today's candlestick, you can see, coincidentally, 2,685. Now, I understand we are off marginally by, I believe, 0.2 or 0.3 of a point, but largely for argument's sake, we have now just closed the final window, which is exactly what we spoke about in the last trading session for the month of October as we established that of the gap. Now, the gap itself out of this support area, it is technically bullish. However, for the majority of this move, really for the entirety of this move, we have sat out of it. Although we are technically bullish on the markets, our entire forecast really has been wait for the pullback, wait for the windows to close, and the significance, again, just to repeat today, is that we have largely closed these windows. I've showed you it on the S&P 500. Here is the same chart of the NASDAQ. Pay attention to the H and the L. The H on this candlestick, 7,166.84. If we now look at the L of this candlestick, you can see it's 7,101.2. So we've actually overshot the open window on the NASDAQ. We've more or less closed, or at least tagged it, on the S&P 500. And there is still a very small window open on the industrial average. But, okay, once we see a marginal move just below today's wick on the industrial average, this retracement should be very close to finishing. And that is very positive news for people in the markets around the world, and for those who know what to look for when it comes to technical signals. The reason I say this is because obviously the sentiment right now is rather pessimistic. It's rather bearish. And what's happening is that the consensus, okay, the uninformed consensus, are beginning to question, are we entering into that of a larger retracement? Are we entering into that of a larger correction? And I still hold very firmly, very close to heart, that this is more or less the end of what has been a pretty decent correction since the beginning of October. It's probably going to take us through to the third, if not the fourth week of November, until ultimately we stabilize. But what should happen, okay, is as we enter or draw close to the month of December and into the first quarter of 2019, we should see these markets collectively really accelerate to the upside. And what's going to happen is when we look back on the detail of the year 2018 and really what it has been, we're going to look back and say, well, 2018, although it wasn't impressive in terms of net movements higher, it was that of a larger consolidation, really a digestion of the moves that we have seen really since the mid portion or the late stages of 2016. Obviously, the markets cannot continue, right, in this sort of elevated state forever. They do need a little bit of time to breathe, to rest, again, to digest a lot of these gains which have been made since 2016. And that's really going to become the story of 2018. At the same time, it's going to also lay a very good foundation ultimately and platform for this bull market to continue, but most likely ultimately fizzle and reverse in the year towards the back end of 2019. Which is going to coincide with that of a major market top, a market top that we did see in the year 2000, also a market top that we did see in the year 2007. I'm expecting it to show up late 2019, if not very early in the 2020 year, which is going to be a very interesting year for a number of different reasons. Outside of that, I mean, look, I can go through the technical picture for you. We can go through the simples and the exponentials. I don't generally do this here in these YouTube market updates. What is important, however, is that you understand, even if we do see a little bit of a temporary bounce, we are still going to most likely hold around this area for a number of sessions, which is going to allow these oscillators to reset a little bit further. If you pay attention to the MACD and also the stochastics, these are just starting to cross once again. However, these are not going to be true, right? Sell signals, these are going to most likely coincide with a higher low temporarily. And as we push on back down into oversold territory, you're going to want to look for those white candlesticks to develop, which are ultimately going to lay, hopefully, that of the higher low, which is going to set up a really, really, really nice buying opportunity. So something to pay attention to, something to look for. What I can say is that this reversal, or at least the support area, it's probably not going to show up overnight. It's probably not going to reverse in simply one session's time. I still believe that we ultimately need to close the entirety of the window on the industrial average like we have done on the S&P and the NASDAQ. That is still yet to occur. So even if it is an intra-session push lower, which doesn't really materialize into anything further, that would be exceptionally bullish for the markets. And as I have said also, as bearish as what this retracement has been over the past 4 sessions, this is what in the larger picture is most bullish for the market. As silly as that sounds, this retracement right here to close these open windows is a very healthy continuation of the larger sort of environment that we have been in for 2018, and I've made point of this over the past number of weeks in Pro. What would be most bearish for these markets would be to have seen them just pushing up to resistance and then begin to reverse. That would have been exceptionally bearish. We would have been sitting here saying, well, there's a good chance we have lower prices below that of the October lows to price in before continuing higher. But because we have given back the gains that we've seen over the past 2 weeks, and we've more or less closed these open windows, it really lays or begins to lay a really solid foundation for these markets to just grind on up higher and continue above the all-time highs that we've set up in the months of September and also the months of October. All right, I just wanted to point out a couple of individual stocks as well, which are really nice. A lot of these stocks pulling back down into macro support. For instance, Apple, we've highlighted at 191.47. You can see we've obviously overshot that. But again, we're just selling off back into macro support. Support that was support for 3 months. Not the best words there, but you can see over here throughout the months of May through to the end of July, we more or less were stuck in that of a rectangular pattern. That is exactly where we're selling off into, and it makes a lot of sense for Apple to more or less stop here in alignment with the markets, right? And a bunch of these other companies doing the same thing prior to actually grinding on up higher and ultimately breaking to fresh new all-time highs. The same is true for Amazon. Still have a little bit further to fall. I'm still looking at this moving down to 1,550. We've got Boeing Airlines pulling right on back into that general area of support that we have been looking for. Baidu, I'm really liking the trade setup on this one. This is starting to look like that of a rounding bottom. So as a disclaimer, just watch for this. I'm not sure if it's going to set up, but this is forward-looking analysis for you. I'll give you a piece of a little bit of a gem here for those who are listening. What we have here is potentially an exhaustion move to the downside. So very rarely do you see this pattern play out. It's quite a hard pattern to pick up on, especially for those who are rather novice and don't really know what they're looking for. This right here is an exhaustion gap, and to see these candlesticks in the formation that they're making, it's really starting to suggest that of a rounding bottom, or even that of in a sort of an island reversal type of pattern. So if we see a gap out of this, say tomorrow on Thursday, and we get another gap just here, this is going to be the final confirmation signal for Baidu to begin its ascend higher, right? This is a very strong pattern here. We've picked up on similar patterns in the past, right? But this is a very strong potential pattern. It hasn't confirmed yet. If we see a gap on Thursday, Baidu is good to go. I mean, really, it is good to go. We've got Caterpillar trying to pull on back down. Still have to close this open window, in my opinion, but we're still holding up around 125, which is rather interesting. We have COP sitting on its support. No bullish candlestick to talk about yet, but I assume it's going to set up over the coming couple of sessions. We've got CVX trying to do the same thing. Open window. So it does look as though, look, the markets do have a little bit further to fall until we can actually close a bunch of these open windows on these individual trades. But at the same time, you know, Consider Google, for instance. We're pretty close to ultimately its macro support. I mean, it doesn't really bother me if we sell off from $1,050 down to $1,000 per share. Look, it's a $50 move, but it opens up the risk and reward for Google to move from $1,000 all the way back on up to, you know, $1,275, $1,300, which is going to be an exceptional reward risk ratio. So I think you're understanding, I guess, the dynamic, how these things are sort of interrelated, interconnected as well. And you have to pay attention to the patterns. The patterns are very, very important, especially when you're trying to get a foothold in the actual swings in price action, definitive, legitimate, actionable swings, which we are very close to establishing. IBM trying to pull on back down. Still expect a little bit of weakness here, but if we generally hold in this vicinity, what we are going to have, and what I haven't spoken about, is that of W or double bottoms. W for winner. All right, great little pattern here, potentially setting up. Depends whether or not we sell off a little bit further. And what you need to look out for, also as I've already referenced, is that of that higher low moving forward. Very, very powerful pattern there. Under construction, not only on IBM, but a bunch of other stocks that we've just actually rotated through, one of which also being that of Netflix. We've been waiting for Netflix to come on back down to 280. It's done that. We've closed the open window. So you see these open windows, some of the stocks have closed, all right? Some of the individual markets or the market indices have closed, but we also have some stocks and also the Dow Jones Industrial Average that just need to pull on down a little bit lower. So again, when you see this or when you comprehend this, you have to understand that the markets are still going to be relatively volatile until we see agreement or alignment of these open windows closing. What we're going to do in due course is begin bringing down these triggers. It's something that we'll go through over the weekend, but at the same time, although we haven't been all that active in the market for 2 weeks, what we have done is that we've really sidestepped, right, a lot of these short-term temporary profits that are now, if people haven't closed out of them, they are unrealized losses, and they're probably sitting there, again, contributing to a lot of the pessimism and, a little bit of the fear going on in the market at the moment. Just wait until those people flush out. What they'll do is they'll sell to close. They will add to the selling wave. And then what we'll do is we'll be on the opposite side of the trade. We'll just be buying from those people selling who are underwater on originally buying what was that of a very short-term bounce in the market, a bounce of market noise built on really no foundation whatsoever. That's why we've been really just waiting around, waiting for the market to pull on back down before we act moving forward. So on that note, everybody, that's going to do us for this Wednesday afternoon market recap. I wish you all very well. Thanks a lot for watching this YouTube channel as well. If you're interested, have a look into that pro analysis class also. All right, everybody, I'll see you later in the week. All the best. Goodbye.